Hello folks, SoundHound continues to hold the $4 level, and if earnings come in good on Thursday, we can see a huge rally back up to the $6 or $7 range. But before we talk about that, I want to summarize what happened to the broader market this week amidst the slew of macroeconomic data that was released. Before we begin, most of you are not subscribed, so please hit that like and subscribe button to get instant updates when I post SoundHound videos. And also, I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. The markets were volatile last week and I was bearish for most of it, but Friday's action was decisively bullish, and I think the markets will keep rising for the next few months. This is because we got labor data such as unemployment rising and non-farm payrolls falling below expectations. What does this mean? It means the economy might finally be slowing down, which will bring forward rate cut expectations. Of course, rate cuts are good for equities, and that's why you saw the markets rally on Friday. On top of that, Apple released results that were not as bad as the markets expected, so that was a positive surprise. Essentially, I think the correction is now over. My Nasdaq short hedge got stopped out on Friday, and whilst there are no guarantees in the market, I'm about 90% sure that this current correction is finished. When it comes to the current stock market leader, Nvidia, it dipped a little during the correction, but it didn't even reach the 100-day EMA, and it has bounced strongly along with the market. A notable earnings release on Monday will come from Palantir after hours, so keep a close eye on the market's reaction to their numbers. I think the AI and chip sectors will continue to lead this bull market, and if we take a step back and take a look at where we are in the boom bust or bubble cycle, I think we are around this dip here. So here's what I think will happen next. Historically, when unemployment bottoms out and begins to rise and payrolls start to drop, a recession occurs. I think we will get a recession this time round, but it won't come until the middle or end of next year. Furthermore, the stock market usually foresees the recession coming and begins selling off around 3 to 6 months beforehand. This gives us around 6 months of time whereby the stock market can rally hard. Indeed, I think we're in the final third move of this bull market that will be punctuated by a blow-off top. Again, this move might take only 6 months to happen. And that might sound like a very short time, but a lot can happen in 6 months. I mean, look at SoundHound back in February. It went up more than 3 times in less than 4 weeks. If it happened before, it can happen again. So in terms of numbers, I think the Nasdaq can rally another 20% for the remainder of the year. The PE multiple of the S&P 500 will probably expand to something like 35 to 40. It's currently sitting at around 27, as you can see on this chart. And we're probably going to see outperformance in small caps. I think the Russell 2000 can rally 30% or more for the remainder of the year, outperforming the Nasdaq. And when it comes to SoundHound, I think it's going to easily retake its prior high of around $10 as long as management delivers solid numbers for the next few quarters. My intermediate price target for SoundHound is $12, and I've been saying this since the beginning. Anyway, going back to the bubble chart, I think this final third move will be explosive, but unfortunately, usually these explosive moves end in tears. If we do get this huge rally, I'll probably set trailing stops on most of my portfolio and sell out if the market begins to tank. By the way, this is total speculation on my part and is in no way intended to be financial advice. If anything, this is meant for entertainment purposes only. So in summary, we are going to get the rate cut expectation rally for the next 3 to 6 months. Then the Fed will cut either in July or November after the election. And then after that, we will get the post rate cut rally for another few months. And finally, I think we'll get the pre-recession sell-off in the market 3 to 6 months before the recession actually arrives late next year. So this is highly speculative and probably going to be incorrect, but it's good to have some sort of a framework for where we are in the market cycle. So that's enough of the big picture stuff. Let's zoom in on SoundHound. Unfortunately, even though SoundHound held long-term support the last few weeks, it hasn't really rebounded like the market over the past few days. I thought it was going to have a huge day on Friday, but the reaction was quite tepid to say the least, with the Nasdaq rising 2% and SoundHound barely budging. I think next week it should rally for a few days into earnings, and if the numbers come out good, we could see SoundHound finish close to $6 on Friday. However, if the numbers disappoint, we could see another sharp sell-off down to $3.50, so there is a real risk here if you decide to buy before earnings. I'll do an earnings preview video on Tuesday for SoundHound, so look out for that video. But what am I doing with my SoundHound position? Well, I'm still holding and not buying any more just yet. I'm going to wait until earnings to do so. The ideal scenario for me is that we rally into earnings, then we get some good numbers and finish the week around $6. And then I would buy more on the next retracement. That's because if this quarter's earnings are good, SoundHound will probably rally for the next 3 months, and I'm willing to pay a high price for that. I think buying before earnings is quite risky, but of course, everyone's risk tolerance is different, and I'm not going to tell you what to do with your money. So that's it for today, folks. If you still own SoundHound, let me know in the comments below, and don't forget to like and subscribe to get more SoundHound updates. Thanks for watching and see you next week.